Hello guys, welcome back to CA Dreams YouTube channel. So this is the lecture number 11 in English. So we are doing company audit and we have to start with the topic duties of auditors. So your section number 143 of the Companies Act 2013 specifies the duties of an auditor of a company in a quite comprehensive manner. It is noteworthy that scope of duties of an auditor has generally been extending over all these years. So, your section number 143 denotes your duties of auditor stands for duties of auditor. So, your first duty is to inquire on certain matters. Now, you are the future auditor. You are pursuing chartered accountancy course, therefore you are the future auditors, right? Now, if today also I give you a task that you have to audit, you have to perform audit of this company or this client, then how you will start? So first of all, you will go with inquiry of certain matters. Then only you will start with the further process, right? So therefore, it is the duty also, and this is the first step also, that first of all you have to do your inquiry on certain matters. So it is the duty of every auditor that he should make a proper inquiry of certain matters or the matters of his subject matter. So under provisions of section number 143 subsection 1, it is a duty to inquire into the following matters. So your institute has given under this section various you can say clauses or heads according to which you have to inquire on certain matters. So what are the certain matters? They have just listed them. So first of all, you should inquire that whether the loans and advances made by the company on the basis of security have been properly secured and whether the terms on which they have been made are prejudicial to the interests of the company or its members. So first of all, they are discussing about loans and advances. So loans and advances are basically your assets, right? So what are these loans and advances? These are the, you can say, amount of money you give to someone. So first of all, you have to inquire that whatever money the company has given in terms of or as loans and advances to anyone, so whether that money is properly secured, whether the person to whom the company has lended the money, whether that person will be able to return that particular amount to the company. So whether it is properly secured. Also, you have to inquire that in the basis of the terms and conditions of that lending of money or the you can say advances which have been given by the company, so are those terms and conditions in favor of your company or the company of which audit you are doing? Okay, so these things you have to inquire, that whether the loans and advances are properly secured, and also whether the you can say the terms and conditions on which those advances have been granted are in the you can say prejudicial, that means in the favor of the company. Then your next point is whether transactions of the company which are represented merely by book entries are prejudicial to the interests of the company. So they are saying that whether transactions of the company which are representative merely by book entries, that means the transactions which are represented by book entries, that means the entries which are made on the transactions, various transactions. So whether those transactions are in favor of the company, you have to inquire on the transactions also of the by inquiring means after you will see the entries in the books, you have to make an inquiry of the transactions. Now your C point is whether the company, not being an investment or banking company with so much of assets, have as consist of shares, debentures and other securities, have been sold at a price less than that at which they were purchased by the company. So now if your company or the company of which audit you're doing is an investment company or a banking company, then this point is not for you. But if the condition is not so, that means if a company is other than an investment or banking company, then you have to make an inquiry on some matters, and those matters are that you have to test the assets of the company. Like suppose if the assets of the company consist of shares, debentures, or other securities, so you have to inquire that is that happened that the company has sold those shares or those securities at a price less than the price they were bought. That means, is there any sale and loss? That means you have to test, you have to inquire that whether the assets, the securities you have sold, whether they are sold in a profit, or that sale is profit making or that sale is loss making. So you have to inquire on that. Okay. Now your fourth point is again for loans and advances. So you have to test, you have to inquire that whether those loans and advances are under loans and advances only, or the accountant of the company has shown those loans and advances as deposits. Because if he has done so, then this is wrong. Loans and advances and deposits are different things, right? So you have to inquire that whether the deposits are um, not a part of loans and advances, and the deposits are the deposits only and not the loans and advances. They have to inquire. The fifth point is whether personal expenses have been charged to revenue account. Now, are you allowed to charge your personal expenses in the business books? No. Personal expenses should be differentiated from the business expenses. So therefore you have to inquire that no personal expenses have been charged to the revenue account of the particular company. The fifth inquiry you have to make is whether it is stated in the books and documents of the company that any shares have been allotted for cash, and whether cash has been actually received in respect of such allotment. And if no cash has been actually been so received, whether the position as stated in the account books and in balance sheet is correct, regular, and not misleading. Now suppose the company has allotted the shares for cash without that means they have written in the books that they have allotted it for cash. Okay, but in actual what has happened, they have yet not received the cash. So you have to inquire that whether the accounting has been done properly. Like if they have written that they have allotted the particular shares for cash, so whether the cash has been actually received or not. This is a kind of, you can say, example only. You just have to check that whether those accounts are not misleading. Okay. So these are the 6 points you have to inquire on certain matters the institute which has listed are. Okay. So first is your loans and advances. Second is your book entries. Third is your investment company, banking company, securities basically. Then your fourth is again on loans and advances. Fifth is on personal expenses, and sixth is your, you can say, cash, or you can say not misleading 1 point. Right. So this is your first duty. They've also given one more paragraph. The opinion of the research committee of the ICI is reproduced below. The auditor is not required to report on the matters specified in subsection 1 unless he has any special comments to make on any of the items referred to therein. If he is satisfied as a result of the inquiries, he has no further duty to report that he is so satisfied. In such a case, the content of auditor's report will remain exactly the same, as the auditor has to inquire and apply his mind in the information elicited by the inquiry in deciding whether or not any reference need to be made in his report. In our opinion, it is in this light that the auditor has to consider his duties under section 143 subsection 1. Therefore, it could be said that the auditor should make a report to the members in case he finds answer to any of these matters in advance. So see, I'll explain you the meaning of this paragraph. They are saying that it is the duty of the auditor to inquire on certain matters. Now, yesterday in the last video, I explained you that it is the right of the you can say right to report to the members, and also it is the duty of the auditor to report to the members. Now, do you have to make the reporting of each and every inquiry? No. Like suppose you have inquired on these 6 headings. Suppose in this heading you found, under this head you found that the company has shown loans and advances as deposits, and it is a amount of say 1 lakh. So what you have to do, because this point, or you can say this factor, is in adverse of your inquiry. You have inquired and you found that this is an adverse, right? This is an adverse situation. It should not happen like that. So what you should do, you should report on the matters if you face that those are adverse. But if everything is good, if everything you find is favorable, then you do not need to report on each and every inquiry, right? So this only they are saying. Now moving on to the next duty. The next duty is duty to report. So yesterday we have read right to report, and now we are reading duty to report. Wait, I'll show you. Right to report to the members, and this is the duty. So you can say that duties and rights are same only, a bit different, but almost they are same only. Okay, so duty to report. But before discussing this duty to report, first of all, I'll complete the other duties and then I'll move back to the duty to report, because this is a lengthy duty, and I'll explain you this in one go. So your third duty is duty to sign report. First duty was duty to inquire on certain matters. Second duty, duty to report. Third duty, duty to sign that particular audit report. So as per section 145, the person appointed as an auditor shall sign the audit report or sign and certify any other document of the company in accordance with the provisions of section 141 subsection 2. So this section 141 states that whether a firm including a LLP is appointed as an auditor of a company, only the matters who are chartered accountants, only the partners who are chartered accountants shall be authorized to act and sign on the behalf of the firm. This we have already studied, but in general, if it is a proprietary firm or a partnership firm, then the chartered accountant who is appointed as the auditor should sign or certify the document, the audit report. But if it is an LLP, then only the partners who are chartered accountants can sign on behalf of the LLP, right? And also, the qualifications, observations, or comments on financial transactions or matters which have any adverse effect on the functioning of the company mentioned in the auditor report shall be read before the company general meeting. They are saying that if there are observations or qualifications or comments which you feel are having an adverse effect on the functioning of the that company, so in that case, along with duty to report and duty to sign the report, you also have to read out those mentioned observations in the general meeting. Okay, so this is the case if you find that there are some observations which may have an adverse effect on the functioning of the company. Now your fourth duty is that you have to comply with the auditing standards. You have to do everything as per law, and therefore you have to comply with all the auditing standards. So every auditor shall comply with auditing standards. The central government may prescribe the standard of auditing as recommended by ICI in consultation with and after examination of the recommendations made by NFRA. That means National Financial Reporting Authority. So your CG along with NFRA gives you some auditing standards, and you have to comply with those auditing standards. Your fifth duty is that you have to report on frauds. So there are again three categories here. You have to report to central government if an auditor of the company in course of the performance of his duties has reason to believe that an offense of fraud which involves or is expected to involve individually an amount of rupees 1 crore or above is being or has been committed in the company by its officers or employees, so then that matter should be reported to the CG within such time and manner as may be prescribed. That means if you find or if you come to know that has a reason to believe, or if he finds that the officer or employee of the company is involved in fraud or for an amount exceeding 1 crore, that means 1 crore or above, then you have to report to the central government about that fraud. And in case of fraud lesser than 1 crore, you have to report to the audit committee under section 177, or if there is no audit committee, then to the board. Then disclosure and board report. The companies whose auditors have reported frauds to the audit committee or the board but not reported to central government shall disclose the details about frauds in board's report. So they are saying that suppose you have reported to audit committee or board, Then what you have to do, you have to do one additional duty. In that, what you have to do, you have to make a disclosure, and you have to disclose all the details of frauds in the board report in such manner as may be prescribed. So subsection 13 of section 143 safeguards the act of fraud reporting by the auditor if it is done in good faith. It states that no duty to which an auditor of a company may be subject to shall be regarded as contravened by reason of his reporting to the member above when it is done in good faith. It is very important to note that the provisions regarding fraud reporting shall mutatis mutandis, that means as it is applied to cost auditor and a secretarial auditor during the performance of his duties. If any auditor, cost accountant, or CS in practice do not comply with the provisions, if they do not comply, auditor, now this punishment is for auditor, cost accountant, or CS. So they will be punishable with not less than 1 lakh, which may extend to 25 lakh. Besides, auditor has to report all the matters as per CARO. Now we will read CARO 2016 after some topics. Okay, after these topics I'll explain you some standards and then we will discuss CARO. They have given an example. The head accountant of a company entered fake invoices of credit purchases in books in aggregate of 50 lakh and cleared all the payments to such bogus creditor. Here the auditor of company is required to report the fraudulent activity to the board or audit committee. Why? Because the amount is less than 1 crore within 2 days of his knowledge. Further, the company is also required to disclose the same because here the disclosure was not made to the central government, and they have clearly mentioned it that if there is no report to the central government, then you have to disclose everything in your board report as well. It may be noted that the auditor need not to report to the central government as the amount is less than 1 crore, but you have to report the same fraud as per CARO as well. Okay. Now your sixth point is duty to report on any other matters specified by central government. So if there is any other matter, then you have to report on that also. Duties and power of the company's auditor with reference to the audit of the branch and branch auditor are discussed separately. And duty to state the reason for qualification or whatever qualification you are given, that this report is your qualified, unqualified, you have to disclose you have to state the reason for your qualification or for your report in your audit report. Okay, so where any of the matters required to be is answered in negative or with a qualification, like suppose if you have given the negative report, adverse report or qualified report, then you have to state the reason therefore. Okay, so these are your duties. One duty is left, duty to report. I'll make a separate video for this duty because there are various points in this duty, so therefore I'll discuss it in a short video. Okay, in the next video. So I'm ending this video here and will continue with the 12th part. Okay, bye guys.